In today's session, we will be working out another question that deals with the preparation of fund flow statement. The question goes like this. The following balance sheets of ABC Limited as on 31st December 2019 and 20. They've given us the details and they've also given us some adjustments. The following transactions took place during the year 2020. Dividend paid 40,000. Income tax paid 50,000. There was a profit on sale of investment rupees 10,000. Machinery costing 50,000 was sold for 20,000. Prepare the statement showing changes in working capital and fund flow statement. Now, this is the question, and with this question, we have to go about with the preparation of the fund flow statement. For us to prepare the fund flow statement, the first step is that we have to prepare the schedule showing changes in working capital, following which we have to prepare the adjusted profit and loss, and finally we have to prepare the statement of sources and application. Before we go about with the preparation, let's discuss some of these items just to see where exactly will that be falling. Fixed asset. Now notice there's a change in fixed asset, and we have to try and see what is the change with the fixed asset. So here, if you notice, there are we have some adjustments. So we have to prepare a ledger account for fixed assets. Investment as well. Similarly, there are some changes. So for this, we will have to go about with the preparation of one ledger account. Stock, this will go into schedule showing changes in working capital. Debtor, this will also go into schedule showing changes in working capital. Similarly for cash and bills receivable. Now let's look at the liabilities. Share capital, there's an increase. 4 lakh has become 5 lakh, which means you have issued share capital. Issue of share capital is actually a source. General reserve, notice general reserve, there's a change, and this change of 50,000 you will have to accommodate in your adjusted profit and loss account. Profit and loss, this is nothing but net profit. This will turn out to be your opening as well as your closing profit amounts. Debentures, the amount has remained the same, which means there will not be much changes. Notice with respect to depreciation provision, there is a change, and that has to be accommodated. Okay, so the depreciation, we have to try and see what is the change that we have to go about. Provision for taxation, notice for provision for taxation, there is a change, and we also have some changes with respect to income tax. So for this also, we will have to prepare a ledger account. Debtor, notice what has happened with debtor, it's creditor. Creditor, this will go into your schedule showing changes in working capital. So the very first step that we have to carry out is the preparation of schedule showing changes in working capital. So I have got the format of schedule showing changes in working capital over here, and let's try and fit in the items one by one. At first, let's incorporate the current assets. So first we have stock, and stock is how much? Stock is 1,50,000, and then we have 1 lakh. It is 1,50,000, and then we have 1 lakh. Now notice what is the change with respect to schedule showing changes in working capital for the item of stock. So stock is decreasing. Stock has decreased by 50,000. What impact does it have on working capital? Working capital will reduce by 50,000. Next, what we have is debtors. Debtors, what has happened? Debtors is 1,20,000, and then debtors, it is 1,20,000, and then here it is 2 lakh. So what has happened with debtors? Debtors has increased. So it has increased, and what impact does it have? So impact that it has is that working capital will increase by 80,000. Next item that we have is cash. So cash is how much? Cash is 25,000 and then 95,000. 25,000 and 95,000. What is the change with respect to cash? Cash has increased. What impact does it have? It will impact your working capital with an increase in working capital. So your working capital will increase by how much? Working capital will increase by 70,000. Next, what we have is bills receivable. Okay. Next, what we have is bills receivable. So bills receivable is how much? Bills receivable is 10,000 and 5,000. 10,000 and 5,000. So what impact does that have? Bills receivable has reduced, and there will be a reduction in working capital by 5,000. Now, next, what we have to do is we have to total up the total current assets. Okay, we have to total up the total current assets, and let's sum up this. Okay, so this has been completed. Okay, so this has been completed. Next is that we have to move on with the liabilities. And what are the liabilities that we have? The liabilities that we have are creditors. Creditors is 15,000 and then 30,000. Okay, 15,000 and 30,000. So that has been completed. And next, what we have to do is we have to total this up. Total up the current liability. So how much is the total current liability? Here it will remain the same. So here it will be 15 and here it will be 30. Oh yeah, we forgot to monitor the change. So 15,000 has become 13,000. So what has happened? Your working capital has increased. Because of this increase, what impact does it have? Your working capital will reduce. How much will it reduce by? It will reduce by 15,000. Now, next step is that we have to calculate the changes in working capital. So what change does it have? So current asset minus current liability, here it's 2,90,000, and then here it is 4 lakh minus 30,000, which is 3,70,000. Okay, so now what impact does it have? There is a increase in working capital. Okay, increase in working capital. So increase in working capital is by how much? Increase in working capital is by 80,000. So which means the total here is 3,70,000. Here also it is 3,70,000. So that has been completed. Okay, that has been completed. Okay, so with that, we have come to the end of the schedule showing changes in working capital. So next, what we're going to be doing is we are preparing the ledger accounts. And the first ledger account that I'm going to be preparing is provision for taxation. Okay, so provision for taxation. Now remember, provision for taxation, this is a liability. Okay, provision for taxation, this is a liability, and the liability would be starting off, since it's a liability, since it's a nominal account, the opening balance will be featuring on the credit side. So it will be by balance brought down, and the balance that you bring down would be, the balance that you would be bringing down is 40,000. Okay, balance that you will be bringing down is 40,000. So that has been considered. Then closing balance will be featuring on the debit side. So to balance carried down, and then here it is, 50,000. Okay, here it is 50,000. Okay, so this has been completed. Now, next, what we have to do is we have to consider the payment of tax. Now, when you pay tax, what is that for you? That will be an expense for you. So provision for taxation, we know that is a nominal account. Golden rule is debit all expenses and losses, credit all incomes and gains. So since it's an expense, it will have to feature over here. So to cash paid. Okay, why? Because this is nothing but your tax paid. Okay, that's your tax paid. And what is the amount? And the amount is the amount that you have paid as tax is 50,000. The amount that you have paid as tax is 50,000. So that has been considered. Okay, that has been considered. Let us see if there are any more, if there are any other items that we have to consider. There are no other items that we have to consider, which means we have to balance out the ledger account. Okay, we will have to balance out the ledger account. Okay, so which side is more? Debit side is more. So where will the balancing figure fall? The balancing figure will fall on the credit side. So by adjusted profit and loss account. So the balancing figure is 60,000. Now, when will you have a balancing figure falling on the credit side? You will have a balancing figure falling on the credit side when it's a income. So what kind of an income can you have provision for taxation? The income that you can have in your provision for taxation is when you add a new amount. Okay, when you add a new amount. So addition of new amount into provision for taxation. So what is this? This is nothing but an appropriation, and this will have to fall into your adjusted profit and loss account. Okay, this will have to fall into your adjusted profit and loss account. So this has been considered. Okay, so this has been taken care. Okay, so this is what the amount that you will have to consider into your adjusted profit and loss account. Now, next, what item do we have? Next, what we have is we have investment. Okay, we have investment, and we have to prepare the investment account. Okay, we have to prepare the investment account, and investment account. Let's open up. So okay, now investment account, we know it's real. So your opening balance will fall on the debit side. So to balance brought down, and the balance that has been brought down is 2 lakhs. Okay, and 2 lakhs, and then here it is by balance carried down, and then 1,80,000. Okay, 1,80,000. So that has been taken care. Okay, 1,80,000, that has been taken care. Okay. Now, what has been told to us is that there was you have sold some profit. You have sold some of your investment. Okay, you have sold some of your investment, and on the investment that you have sold, you have made a profit. Okay, you have made a profit. So when you have sold that, when you have sold some investment, you have made a profit. Now that profit, that profit, where should you so profit has been mentioned to be 10,000. Okay, so when you sold, you have made a profit of 10,000. Okay, you have made when you made a sale, you have made a profit of 10,000. Now the 10,000's profit you should be technically showing in your adjusted profit and loss account. Okay, you have to be showing in your adjusted profit and loss account. So here, what will happen is you will have to consider the profit, and we have to deduce the amount that you have sold. Okay, so how do we go about with this? So profit, it will be transferred to the adjusted profit and loss account. So to profit on sale of investment. Okay, to profit on sale of investment, and you have transferred 10,000. Okay, you have transferred 10,000. And how much of item have you sold? So that is what we have to deduce right now. So let's balance out this. Okay, let us balance this out. So let's bring in total, and total here it's 2,10,000. Okay, so which means here also it's 2 lakh. Here also it has to be 2,10,000. So which means the balancing figure. So the balancing figure is balancing figure is 30,000. Okay, balancing figure is 30,000, and that we have considered. So that has been taken care. Yeah, that has been taken care. Okay, so now remember, you have made a profit of 30,000, and you sold investment worth 30,000. Out of that investment worth 30,000 that you have sold, you have made a profit, and the profit is 10,000. So technically, you have only sold investment worth 20,000. So you received cash. Okay, you have received cash of 30,000, and then that is the reason why it has gone about in this manner. In the meanwhile, there was one question that came up, and the question was, how do you figure out which all are the items for which you have to prepare the ledger accounts? The answer is very simple. All that you have to do is you have to look out for items where there are changes and you're not able to figure out why those changes are there. Okay, so why those changes are there. For all such items, you will have to go about with the preparation of the ledger account. Now, next, what we have to do is we will have to prepare the ledger account for fixed assets. Okay, the next what we have to do is we have to prepare for fixed asset account. Okay, fixed asset account, and fixed asset account this is also real. So you will be starting off on the debit side, and here how much is it? It is 5 lakh. Okay, it is 5 lakh, and then here it is 7 lakh. It is 7 lakh. Then what have they told you? They have told you machinery costing 30,000 was sold for 20,000. Okay, so machinery costing 50,000 was sold for 30,000. So what does that mean? What that means is that you have sold some machinery and you have made a loss. Okay, you have made a loss, and that loss amounts to 30,000. Okay, so the actual cost of the machinery was 50,000, but you're selling it now for a loss, and then that loss is 20. So how do you go about with this? So by cash account, and how much of so when you made a sale, cash, there's some amount of machinery which has gone out, and that works out to be 20,000. Okay, then next is you have to transfer the loss. Okay, so by loss on sale of machinery. Okay, so this is 30,000. Okay, so this we have considered. Okay, so this we have got, this we have considered. Now what we have to do is we have to balance this up. Now how much is the total? Here it is 7,50,000. Okay, so here it is left 7,50,000, and so now there's a balancing figure. How much is the balancing figure? The balancing figure is 2,50,000. So what does this mean? You have bought some fixed assets. Okay, so which means you have bought some fixed asset, and how much is this? And this is 2,50,000. Okay, 2,50,000. Okay, so this we have to consider into your applications. Okay, so this we have to consider into your applications. And so we've completed with the preparation of ledger accounts. Now let's move on with the adjusted profit and loss account. So adjusted profit and loss account, how would we start? We would start off with the net profit. So net profit brought down, and how much is the opening balance? And the opening balance is over here is 1 lakh. The opening balance over here is 1 lakh. Okay. And then now we have to consider the appropriations. Okay, so at first let's consider the non-operating expenses. Now, what are the non-operating expenses that we have? Okay, what are the non-operating expenses that we have? Let's just quickly go back to the balance sheet, and then let's just quickly cross-check with the balance sheet as well. So just to identify that we have everything in place. Okay, so okay, so we have to consider loss on sale of machinery. Okay, so how much is that? That loss on sale of machinery, how much would that be? Loss on sale of machinery is 30,000. The loss on sale of machinery is 30,000. That has been considered. Next, what else do we have? What else do we have is Next, what we have to consider is that next, so that's the only expense that we have. Now what we have to consider is we have to consider the appropriations. Okay, so what are the appropriations that we have? The appropriations we have to consider, one is from here. Okay, so we have to consider this. So to transfer to provision for taxation, and how much is that? That is 60,000. That is 60,000. Then what else do we have? What else do we have? Okay, we have provision for depreciation, which is given to us in this question. Okay, there is a provision for depreciation, so that also we have to consider. To transfer to depreciation provision. Okay, so how much is that? That is 50,000. That amounts to be 50,000. Then we have general reserve. So to transfer to general reserve, and how much is general reserve? General reserve is 50,000. General reserve is 50,000. Okay, so anything else that we have to consider? Okay, we have to consider the there was one non-operating expense that we have not considered, which was interim dividend. Okay, so to interim dividend. What is interim dividend? Interim dividend is the dividend that is paid during the course of the financial year. Okay, so interim dividend is how much? Interim dividend is 40,000. Okay, interim dividend is 40,000. Any other items that we have to consider? That's pretty much most of it. Okay, now we have to consider the two non-operating incomes. To non-operating incomes. By profit on sale of we have profit on sale of investment. So profit on sale of investment is 10,000. Okay, then we have to consider the closing balance. Okay, so how much is the net profit that you're carrying down? Net profit that you're carrying down is 1,50,000. Okay, so let's consider the total. So when we consider the total, we would see that the debit side is more. Okay, so which means the balancing figure on the credit side has to be it has to. So here the balancing figure will be falling on the credit. So this will be by cash from operations. Okay, so this is nothing but your balancing figure. Okay, so this balancing figure, and this will be 2,70,000. So 2,70,000 is your balancing figure in the cash from operations. So we have completed the adjusted profit and loss account. Now, next and the final statement that we have to prepare is the statement of sources and applications. Okay, the next is the final statement that we have to prepare is the statement of sources and application of funds. Okay, so let's go about with the preparation. Now that we are preparing the statement of sources and applications, let's just quickly look at the balance sheet. We see that there is an issue of share worth 1 lakh. Okay, so issue of share worth 1 lakh that has been considered. Next, what we have to consider is the, okay, so issue or share of 1 lakh has been considered. Then what we have to consider is we have to consider fixed assets. So let's just quickly go to the ledger account, and from the ledger account, you would notice that you have made a sale. So you have made a sale. So to sale of investments, and sale of investments, this was 30,000. Next, what have you made? Next, next what you have is you have sold some fixed assets. So to sales of fixed assets, and that is 20,000. Then what else do we have? Then we have application. So the applications that we have over here is so sorry, we need not actually write to and by. So that was a mistake from my end. Just quickly correct that. So payment of tax, and payment of tax is 50,000. Okay, you have paid tax worth 50,000. Then next, what else do we have to consider? Okay, next, what we have to consider is the purchase. So purchase of new, so purchase of fixed assets, and you have purchased fixed assets worth 2,50,000. You have purchased assets worth 2,50,000. Then what we have to do is we have to bring in the increase in working capital. So let's see how much is the increase in working capital. Increase in working capital is 80,000. Increase in working capital, this is 80,000. So that has been considered. Next, what we have to consider is the funds from operations. So funds from operation, we will be taking from the adjusted profit and loss account. So funds from operations, and that is 2,70,000. So that has also been considered. So let's just quickly total this up and see if we have got our calculations correct. So there's a small amount which is missing. So I'll just quickly cross check if I've probably missed out on something. I would have missed out on one item. So let me just quickly cross check if I've considered everything. Yes, I did miss out on one item, and that item was interim payment of interim dividend. So that was an application which I missed out. Okay, so payment of interim dividend, and interim dividend was 40,000. Okay, so that has been considered. And if you notice, both my sources are matching with my applications. So my sources are perfectly matching with my applications. So which means I have my working out, my solution is perfectly fine. Okay, so my solution is perfectly fine, and I have completed with the preparation of the fund flow statement for this particular question.